let's hope to get a little bit better price action this week. So it's Monday. Last week wasn't that great at all for me. Around break even, maybe a little bit of a losing week. This week we got some interesting going on. So market gaps higher. New week opening gap to the upside. Market didn't come back down. So as far as I'm concerned, there's a high likelihood of chance that we could drop this into this gap back into that. And not only do we have that gap unfilled there, we also have another gap here which we are reacting, or not really reacting as of now, but we could react out of this, and so that would be very good for shorts. Let's see how that kind of works out. So I like to use this kind of indicator that shows all these new week, new day opening gaps. So you can see, in this context, the red areas are new day opening gaps, not so important. So I can actually just put those away. But this could be like easy play between new week opening gap here and here. So short towards that area. So we gap higher. We fail to fill that gap really. Like we don't really fill that anyway, and just bump higher. But we keep up building liquidity in this region here. So it's kind of hard for me to expect market to just shoot higher because this is not proper structure. It's chopping higher way too much, and it has been doing that for multiple hours now in a row. So, and the biggest retracement we've got is like here, maybe here, like 20 points or something like that, which we don't even break any significant structure. Market just respects the displacement here and goes back higher. So all in all, market could continue going higher, but we do need to see some type of retracement lower, and I'm expecting to see rejection out of these gaps so that we can actually take shorts. And I don't want to get into longs today, so that's my bias. We got large consolidation. We are kind of breaking away from that here, so we'll see how market, if and when market gets in this new big up, we can kind of see how market reacts out of it. If we, let's say, flip that and close below this candle high, all right, then we're probably going to drive below the lows here. If we see promising structure inside of this, maybe some choppiness, maybe breaking back higher, well, maybe we can then expect market to drive up. All right. But today, only interested in shorts. Now, I know these new week opening gaps are in this region, so I'll just put that indicator off and quickly look at ES. So similar stuff with ES, actually looks totally similar, so totally the same. I'm interested in, do we have any type of SMTs? Let's say this type of high inside of the new week opening gap. Like, I don't know, maybe we could have some type of SMT. All right, we don't have SMT, but all right, let's see how close. So NQ is this much, 40. Sorry, this DXY. So yeah, we don't have any SMT here. I kind of hoped to see something maybe. But yeah, these are relative equal highs you can like look at them, like 5-minute chart here stacked. So maybe you want to see well, first of all, you want to see a rejection lower from this new opening gap, but this is still unfilled. Like, we only filled it to this point, there is a lot of liquidity inside of it, and this whole part here is still yet to be filled. So we could allow market to actually drive fairly nicely above this buy side here. So that's what I'm looking at right now. 50 minutes till market open, so I'm waiting for that. Right. So gap right here. Don't really care about that though. Let's mark out the liquidity pool for ES as well. Well, that's their buy side. All right. So real quick, forexfactory.com. What do we have? We got flash manufacturing PMI, flash services PMI. So same thing, PMI there. Let's look at the whole week. So we got PMI tomorrow, nothing really. Wednesday, nothing. Red folder. Thursday, GDP, unemployment claims, Friday core PCE index. So looking at this, it looks very, very good for me. Like no news. There is no news Monday. We got nice Monday with nice news. Some orange folder news, nothing high impact, but Tuesday, Wednesday, they are still tradable. And then red folder news coming in Thursday and Friday. So very, very good trading week inbound, I would suppose. All right. Currently, I do have an idea what I would want to see, but the price action isn't really good. So we need to see something clean. This isn't really your usual price action where market just opens and gives very large range pre-market. And this is where we get into some problems because like massive range during pre-market could mean that we are going to see just some chopping in the AM session like this. We could easily just not move anywhere. And that's mainly because, this characteristic of a market, when we see this type of movement, we see heavy price action to or heavy trending to a certain direction during overnight. The AM session can, in those kind of situations, be very bad. You don't necessarily want to trade them. So I need to be kind of cautious here. Because realistically, am I expecting market to dump AM session during AM session? Am I expecting market to dump all the way down here? It could do that, but am I expecting that? Not necessarily. Market could just consolidate and maybe drop there tomorrow or something like that, or it doesn't really have to do anything. So certainly this type of trending higher market respecting all the bullish PD arrays isn't really the most favorable price action in terms of if you want to be like having very good AM session. The PM session could be very good though especially if AM session chops a lot. PM session could be good. That's how I feel like. Excuse me. All right, so 12 minutes to market open. To be totally transparent, I would want market to drive as fast as possible to the buy side here, and then see if we can build proper structure to go short. That's honestly everything that I want to see. The most annoying thing that would happen here is market now, like before market open, market breaking structure lower, and before market open, starting to dump and not giving me any entry, and then at 9:30, let's say somewhere here, it just chops. Then, like that would be absolutely bullshit. I don't want that. I don't want that to happen. So because of this current uptrending, even though we got that new week opening gap down here, um, at 9:30 open, I would still be more in favor of longs towards the buy side here. So, so that would be possibly a good long chance, you know. And if we break very nicely price higher, and we break structure, and we get some nice retracement, I'm probably going to take a trade here. I know we are in premium. I know everything like that, but we are close to liquidity pool and we are building structure. Market is actually still sweeping some lows. We build lows such as here, sweep that, run higher, break structure, consolidate, build lows, sweep us that, and maybe new move higher. And we do actually have a lot of structure behind a bullish price, so there's good chance still to catch high probability longs. So I'm waiting to see if that's something that could come to reality. You know what I'm saying? All right, so interesting things happening. Market just opened, and you know we got 1 hour fair value gap here that I've marked. Oh, that's a busy, and market opens. We haven't really tapped into that yet. I want to see tap into that, which happens now. All right, real quick. Um, whoa, that this open range gap is absolutely massive. All right, this is, to be honest, this is a little bit something that I'm not that familiar with. When we drive so much higher with massive opening range gap lower, could that just mean that we are going to have like further drive up? Definitely when 9:30 open smacks lower to this hourly fair value gap, I'm more inclined towards longs at this point if we break higher. That's something I'm probably going to try to take. Real quick look at the ES. ES doesn't actually have fair value gap here, but we got an order block, which we are reacting out of exactly to the point to that. So that's interesting and certainly good price action there. All right, we're starting to drive higher. I'm definitely trying to go long here. We are about to flip this gap. That's a CB. I'm probably taking this inversion. I'm risking half a percent here, and I'm adding if market gives me more confluence. All right. Although we are now pulling back to the gap, and we actually close respecting that gap, so there's no trade. There's no trade yet. All right. Maybe we're going to see another push lower. If we inverse this gap and close above C of this wick, I'm still gonna get in. Not probably. Maybe I'm going to get in. But definitely these IFVG setups, especially very close to 9:30 open, I'm never going to risk my full 1%. I'm going to usually risk 0.5% with these, and then try to add in more if there's a chance to actually add in. So that's the case. Open range gap is massive. I don't know if we are actually having any type of potential to fill this today. Probably not. We are probably just going to see some type of nasty drop some other time. Unless we just start very violent drop now. Okay, let's see how ES is moving. Okay, so ES actually NQ drops again. ES doesn't, which ES could be good long. ES could be decent long. which we also flipped this gap, but we're still respecting gaps in here, which I don't like. So I wouldn't still touch. I would rather just let ES kind of dictate my bias or be at help with that, and then I would rather take the trade on NQ. So waiting for a proper opportunity here. All right. Now we have fully filled that hourly Ferrari gap. Let's see if we can put on like an IFVG on this one. If that's to happen, I'm gonna take the same trade that I already discussed. Okay, kind of just stalling around here, which could be a good sign. Market not willing to break lower. Do we have any type of SMT here? Let's say this low 706. Well, that's a big SMT actually. That is an SMT, so that's behind my idea for a trade. I'll do like that. Right. I'm hoping that we don't see absolutely massive candle now, so that I can actually get into a fine trade a little bit lower here. So idea for an IFVG trade, it would be something like this. Alright. This candle needs to start pulling a little bit lower. At around that New York Open, if I can get the fill. Alright, that closed a little bit too far up. I'm not gonna lie. So we need to see a pull. We need to see a pull lower. Which probably, knowing price action in markets, it's not going to do. It's not. It's just going to leave, and I'm going to feel frustrated as hell. Come on. Jeez, this shit is pulling high. We already swept these highs. What the? Come on, man. Oh, yes, it's moving mad. Sorry. Yeah. Well, definitely I will try an entry from that fair value gap there. If we could just have like a retracement. Yes, not yet at the high there. We're kind of breaking very quickly the structure here, so yeah. This happens quite often with NQ. I'm not gonna lie. It's sometimes it's very good because if you get into the setup, you are moving quickly, but sometimes it just moves way too fast, and that's why I kind of like to use IFVGs because sometimes the general 2022 model doesn't offer an entry, but IFVG, because it's a little bit more aggressive, I can manage to get an entry, but certainly I can't get an entry when it looks something like this. I'm probably trying to have my stop a little bit tight like this. Okay. Okay. Come on, market. Give me that pull down. Okay, I got in with the general 0.5% risk entry. I have my stop at around that hourly fair value gap there. And trade is looking at something like this. If we get proper pull lower here, I will add the next 0.5% in. Or maybe even risk a little bit more, maybe like a little bit over 1%. If I get very good entry here. Okay. Looking to manage. We are still pulling lower, so that's good thing for possible more long entry. Alright, so I'm now in with average fill of something like here. Let's hope for the best. Okay, this type of pull lower, I'm going to have my stop below the low here. You know, being a little bit more patient, I would have managed to maybe get a little bit better feel and, you know, better risk to reward. So I'm having like 1.2% risk at that low, but I decided to move my stop and risk a little bit more. So full TP would result maybe, well, I can figure that out real quick. Probably like 2 to 3% profit. So these equal highs. Just trying to figure out my TP value. All right, so that's 2.3% or something like that. TP. So total fine with losing this as well. Don't really care. And now we just hold, basically. No problems with anything. Bullish price action we put on SMT. I'm risking generous amount, which I'm comfortable with. And okay, nice push higher. Let's hope that this is not like a quick push and quick drop, because this type of large wick now isn't really that nice. And yes, took the high here, so that's not a good sign of anything really. But actually that could be bad. But you know, I'm just holding this because market is still looking bullish. We put on those SMTs. I'm trading with funded account currently and trying to pass some funded account challenges. But of course, I got my funded accounts very cheaply with discounts and stuff like that. So losing an account or something like that isn't really a big deal for me at this point in life. So I will rather risk a little bit more and try to pass the account than just try to be excessively cautious with everything. Like if I have a good trade idea and I believe in it and have conviction, I'm going to risk a little bit more than maybe you would recommend me. And I wouldn't risk this much, even though this isn't actually risking very much. Like something like 1 to 2% risk is totally fine, but with funded accounts, generally you want to risk one maximum 1%. But trying to pass the accounts is totally fine to risk a little bit more as long as you feel convicted with your trading. If you don't feel any conviction with your trading, and let's say you are like beginner in general, uh, you shouldn't really be concentrated in trying to pass the challenge. You should buy challenges because they give you good experience, but you should try to trade with the exact rules that you would trade with regular account as well. Currently pushing nicely higher. I like this. Looks like we are about to reach the pool of liquidity. Price is close. If you haven't traded NQ much, this is what happens very often with NQ. We are close to sweeping the high, and then we just don't do that. Market can put like generous retracement and then maybe run for the high. So you know you kind of have to decide whether you want to take your profits close at the high or just be very very patient and wait for the high to break. I'm just waiting. ES looks like it's well still continuing above the high even though we swept a couple of times. We could still have like a bigger candle lower. And actually with NQ, stop should really be at this low. There's no point of having stop below the swing low here anymore. So what's that? Well, that's reducing my stop fairly well. Now, I don't have very like I'm not that the greatest trader with holding past my liquidity pools. So maybe I should kind of work that out. Like I know all the standard deviations. I could hold to like standard deviation here, but I'm just going to close the trade now. All right. Buy side hit, we got the trade closure. Very good profit. Over 2% win. And that's basically the day done. Best thing about the trading. Sometimes you get nice trade immediately at the open and you're just free. Although I'm still probably going to look at the chart a little bit and trying to figure out if I actually can get into any other trades. But I try not to risk too much anymore because I already made a fair amount of money for the morning. So would be totally fine to just step out of the charts right now. Let me just save this standard deviations. So I can actually just taper this and kind of explain how standard deviation work if you don't know. So basically, standard deviations are kind of just measured moves. So basically, let me remove this buy side. So -1 standard deviation is one standard deviation away from the last move higher lower. So if you want to measure that last move lower is this large, and if you copy that higher, you get the -1 standard deviation. That's how I could explain that to you. And then from here on, the -1 is here, -2, and these are actually good targets. So you want to measure them like this. You take your fib and look for the last price like lower. Like if you're going long, look for the last price like lower here. So in this case, it's from this high to this low. So it's draw from the low to the high, and then the standard deviation is 1. And you can use this as your extended TPs. Let's say you don't know where to kind of target next. You can easily just go for standard deviation 1.5 and try to see if price can actually reach there. All right. I'll see if price can give me another setup today, but other than that, we are done for the day.